Please welcome to the stage our keynote speaker, Colin Walsh, founder of Varo Bank, who will be interviewed by Ron Shevlin, Chief Research Officer at Cornerstone Advisors.
All right. Welcome, everybody. Thanks a lot for coming out. Colin, thank you for joining us today.
Great to be here.
We've got 20 minutes and counting, so I'm going to dispense with all the niceties and all the chit-chat, and let's get down to business. You game?
That sounds great.
Colin, I've been tracking new account opening in the U.S. for the past couple of years, and in last year, 2024, fintechs and challenger banks captured 44% of all of the new checking and payment accounts that were opened in the country. Down slightly from 2023, where it was 47%. So as you look at the market, what are the fintechs and neobanks and digital banks doing correctly to gain that market share?
Yeah, Ron, I think it's really a few things that are allowing the disruptors to gain this kind of market share. So I think first is looking at the experiences that are so frustrating for everyday consumers. So, just glitches and length of new account opening, the ability to easily access funds. There's a variety of things that the incumbents just simply make difficult for consumers. I mean, gone are the days where somebody's going to get in the car and drive to a branch and wait for an hour to get approved for a new account. So I think, first and foremost, it's really addressing a lot of the barriers that have created a lot of frustration for consumers. I think the second is some really good segmentation and looking at where the incumbents have really failed to serve a very large group of consumers. I mean, let's face it, I spent many years myself working in large financial institutions, and there's a lot of profit that comes on the back of hardship when people don't have minimum balances or they incur overdraft fees and the rest of it. So I think really understanding those segments of customers that the banks are not serving well, and the reality in this country and all around the world is that is a massive TAM. And I think so if they can, the challengers like ourselves, I mean, we're committed to serving the everyday consumer who finds themselves living paycheck to paycheck and designing solutions using really quality human-centered design. The other aspect is technology. And so using technology both to create better experiences, but also to drive efficiencies. And we'll talk more about that as well. So being able to effectively, cost-efficiently serve this customer base, but also introducing technologies that create real delightful experiences for customers. So when they come in, they sort of say, wow, this was simple, it was easy, it's addressing my needs, and the institutions can serve them in a very efficient way because of the way they're deploying their technology. And we could touch on all of these more.
So I got to tell you, not to argue or push back, but as I see the market, I think it's less about customer experience and a lot more about product and product design. When I look at who's winning share in that space, firms like Dave and MoneyLion and Chime, what are they doing? They're buying customers with $200, $300, spot me this, offer me this. They're addressing the needs of that segment, but that segment needs money. And so I think they're actually buying it through product design, less about the experience, unless that is the experience.
So, no, but I think you're absolutely onto something, because it's not just what attracts, but then what also engages customers. And so thinking about having those product hooks like you talk about, so whether, like for us now, we are advertising free banking. I mean, that really resonates with a lot of consumers, particularly in this point in time where people are under so much financial pressure. Also getting access to early paycheck. I mean, this is something Chime did very well. They really kind of took advantage of the fact that they could make those funds available earlier to consumers, and it made a big difference in their lives. And so having those, and things like credit. And so Dave offers instant access to an advance with a Plaid linked account. These are things that really matter. The other part of it is, and again, for those of you who are thinking about starting a new neobank or are already in a neobank, I can't underscore the importance, particularly if you're dealing with lower moderate income consumers, funds availability. So having access to money instantly. But now that also comes with another side to it, which is if you get too quick at clearing deposits, whether they're check deposits or ACH transfers or debit card transactions, you also open up a venue for fraud. And so you have to be very good at both being able to create that immediacy of access to those funds, as well as being able to prevent the fraudsters from coming in. And the last point I'll make on this is also, and this is foundational for any financial institution or anybody who is dealing with your money, is trust. And that comes from earning that day in and day out in terms of how the product works. That I talked about speed of funds availability, but also, is your platform effective? Is it working? Is it glitchy? Like, all of those things matter a lot in terms of not just getting customers to your front door, but engaging them and making them into actual primary banking customers.
We'll hit the primary piece in a couple of minutes, but I want to drill down on a couple of the things you talked about. You talked about the segmentation aspect, and I think that's really important. And Chime, Dave, Moneyline, Varo Bank, you've all done a great job of targeting the low to middle income consumer. So two parts to this question. Number one, are there still opportunities for new entrants into the market to address the low to middle income consumer? And then part B is, what are the other segments that are being underserved?
Yeah, well, I think that's the great questions. So now the more affluent, so SoFi has traditionally targeted the Henrys, high income, not rich yet, or whatever they call them, high earners, not rich yet. And that is a difficult segment because it is hyper served. I mean, so all the banks are trying to go after people who have bigger wallets and they can afford more complex financial solutions. So I'd say that probably is less of an opportunity, but there probably is still a real opportunity with some of the cross-border. So you have more and more people that need to send money to people abroad, people who are new to the country. So there's a lot of ways to potentially capture some of these populations that are not that well served. But you and I had a conversation on this. I think some of the more niche players that don't pick a large enough TAM also struggle with that. So the segmentation piece, you want to find a TAM that's not well served, but you also don't want to get too niche because you just don't get the effects of the scale.
Depends on what that niche is, though. One of my favorite fintechs is a company called Panacea Financial that focuses on young physicians.
Yeah.
Now, you'd think everybody wants physicians, but no, what they want is the 20-year physician, not the 20-year-old, the 50-year-old physician. These guys are focusing on the new physicians who nobody will lend to. Another segment I think is real ripe for picking, Colin, is I like to call them Bazoomers, half business, half consumers, the folks who are gig workers. They have side hustles, they're influencers, and they have very unique banking needs. So I think there are a lot more segments that are in there. So second part I wanted to ask you talk about the winning the market share through better customer experiences and the delightful customer experience. But where I think there's this huge opportunity is on the fraud experience. You talk about the fraud, but I think there's this huge opportunity now for financial institutions and fintechs to differentiate on the fraud experience, not the fraud prevention, but once it's happened, how do you take care of that? What do you see in the market? What are you guys doing?
So this is a great question. And the last year in particularly, I think the fraudsters are chasing some of the new technology innovations as much as the financial institutions are. And there's been widespread attacks everywhere. And when you're dealing with a customer base like we are, which is more economically fragile, potentially more vulnerable, they're more susceptible to scams. And so they'll say, oh, I just won the $500 Varo sweepstakes. All I have to do is type in my credentials and I'm going to get this money. And next thing you know, you've got a fraudster that's sidecarding this customer, logging in and looking at when their direct deposit's going to come in, and then they drain the account. So how do you deal with that? You have to build detection that looks at sort of suspicious logins. You have to be able to sort of block logins that don't look right. You have to be able to force a password reset. There's a variety of things that you do that say to the consumer, we think you might have a problem, but we've got your back and we're going to protect you. But it does require quite an investment both in the tooling as well as the experience and thinking through what is that experience you want to create. But I agree with you. I think that identity fraud prevention, but then also how you manage those fraud experiences are going to be more and more important and can be competitive advantages.
Yeah. So let's go to your primacy comment. Yeah. I have found in the research I've done, 3 out of 10 Gen Zers and 3 out of 10 millennials That's basically anybody from like 21 to 45 years old now, Colin, consider a digital bank or a fintech to be their primary checking account provider.
Yeah.
What are they doing right? How do they get the primacy today?
Yeah, well, and as we talked about, I mean, it's a variety of these factors. It's like how you make the product work in a way that just everything is there for that customer when they need it. And also thinking about the kind of broader set of needs that that customer has. So they might be attracted to ditching all those fees, but then they come in and they realize, oh, this is a banking institution that's going to set me up on a credit journey where I can build my credit. I can start accessing credit for different use cases, and it's really simple, it's transparent, it's fast. I mean, all of these things matter, and I think these are the types of kind of, as you think broadly about that product experience and what draws people in, but then what makes them stick is equally important. But I would also get to maybe another point on, kind of sustainability. So I think for many of these players, and we've seen the ecosystem kind of, there's been a little bit of many have gone out with the tide recently, is that you have to have sustainable unit economics. And I think this is one of the things that, our decision a while back to become a bank has served us very well, because we can monetize across a pretty wide range of products. And if you're just examining call reports, it's a lot less simple to sort of understand where our revenue comes from. But for many neobanks are very dependent on, say, debit interchange. That's actually less than 50% of our revenue right now, because we offer a suite of lending products. We offer credit card products that allow us to create that diversification. And then the other side of the equation is the cost base. And I mentioned earlier using technology and being able to get very sophisticated at driving down those unit costs so that the unit economics really work. And one of the things I'd say, we're super proud of is, getting that right up front. We don't have the scale that some of the others have, but we've also maybe taken a non-conventional approach to say, let's make sure the experience works, the fraud works, the risk management works, the unit economics work, the acquisition economics work, and then scale. And so I think we're poised now to kind of go to that next stage, but it's just a slightly different journey that we took. But I do think that the economics are super important.
Well, one of the things you didn't mention in that, I'm glad you didn't, because I would have argued with you on it, is that it isn't necessarily about having direct deposit. And in fact, while that is a huge driver from an older consumer perspective, what I'm seeing in a lot of the research is that younger consumers less tying the direct deposit, and what they're looking for more is more help with their financial performance. And I don't mean health or literacy. It isn't about educational stuff. It's about giving them tools to save more money, drive more savings, drive more investment, higher returns on all of that, cancel subscriptions for them, take care of the bills and things like that. It's those performance tools, and that's what's driving a lot of primacy for younger consumers.
And to your point, many of the customers that come to us, they've never had a savings account before, but we give them both the tools as well as the incentives to learn how to save and do small dollar savings, which can help them in an emergency, giving them access to small dollar credit. I mean, there's many examples around the world where these are just foundational parts of helping communities elevate themselves through microfinance and through micro savings. And same applies in this country where there is a huge need for that.
Yeah, so in the past couple of years too, Colin, we've seen a couple of neobanks, fintechs, digital banks, whatever, exit the market, and I don't mean that in the positive VC sense.
Sure.
So I had written something a couple of years ago called The End of the Neobank Era. I did not mean that all neobanks were going to die. What I meant is we're not going to see a lot of investment in new neobanks. For those that are thinking about starting up, coming in from outside of the US, what do they need to do to succeed in this market now?
Yeah, I mean, I would say it's really the fundamentals. We talked a little bit about unit economics and really making sure that you get that right and that you have a sustainable business model for the long haul. I'd say another thing is trying to find a real kind of defensible moat and some sustainable strategic advantage. And I'll give a few examples of that. Like for us, we chose to become a bank. And I think that was a difficult process, but I think that really affords us a number of advantages. Another route is technology. It's like having all your kind of proprietary tech stack. So I think Nubank has done a nice job at bringing all of their technology in-house. Monzo built early on their own proprietary tech stack, and that's given them a real advantage over time. Another advantage would be a distribution advantage. So I look at like One Financial as a great example. I was speaking at a conference not too long ago, and I said to one of the guys from One that I've got distribution envy. They've got like 200 million captive customers with Walmart. So if you can find those types of advantages, I think that is very important in terms of that long-term sustainable success. The other part I would say is it's really easy to chase sort of features and wanting to have just the whizziest UI and all of that. But really it's about the fundamentals, as you were saying earlier, that the product has to work. So if you're going to offer credit, make credit available, make it transparent, make it affordable. If you're going to offer banking services, make sure that you've addressed some of these foundational issues around moving money and moving money quickly and accurately. And if there's an issue with fraud or there's an issue with a dispute, that you understand how to handle those edge cases. And I think all of that is just kind of really the basics, and it's hard work, and it's not as sexy as just always wanting to be a feature shop and pushing out the new feature. And I think this is where many of these fintechs have met their demise. I would say that people have had us dead and buried for years, but like we're in it for the long haul. I think that for my view is that this is it's a long journey. My previous employers, I worked for a bank that was 300 years old in the UK. I worked for two institutions that are 150 years old. If you're going to build this and build it the right way, it takes a commitment, but it does take capital and investment and the focus on the right things. And I think this is pretty much where you were keying off of.
I'm glad you said that about the feature aspect to it, because I got to believe the age of customer experience is dead. The whole design aspect, AI is going to completely change that, become the new interface. And so let's talk about something that I'm sure nobody else in this conference is talking about,
right.
Artificial intelligence and other new technologies. You look down the road 5-10 years from now, how are the new emerging technologies going to change consumer banking and consumer financial services?
Yeah, I'll touch on a few things, but I mean, AI is just massively.
And you got to be more specific. AI is too broad an umbrella. Like it's generative AI, machine learning.
Get there.
Be specific.
So we've been thinking about, and we've been embedding machine learning in pretty much every facet of the customer lifecycle. So we have models that look at account decisioning, that to say, are we going to actually open an account? Or are we going to reject an account for a consumer? We have AI models now. We're on our third generation model, looking at cash flow underwriting and determining if we're going to give somebody an advance or we're going to give them a line of credit. How much can they afford, and will they be responsibly use that credit access? We use AI in our app to help people understand from a very highly personalized basis what types of behaviors and what sort of things they should be doing to be able to access more credit, to increase their credit line. We use AI in our customer service operation. We have a partnership with the Amazon Lex technology where we're using highly personalized now chat intents that are capturing 58% of our inbound call volume, and with very high levels of customer satisfaction. So those are just a few examples, and fraud is obviously a massive one, and thinking about how you marry your fraud detection models with some third-party vendor solutions as well, thinking about the platforming and how you make sure that those models are looking broadly across every sort of vector or potential risk vector. And so the ability to look at that pattern recognition and fine-tune those models becomes a huge competitive advantage. So is that enough, or should I keep going?
Well, I got to tell you, I think a lot of this is just way down the line, and I'll tell you why. Machine learning, by definition, means that there is a feedback loop that feeds back in and continually validates and updates and corroborates the model. I don't see that feedback loop in consumer financial services. When people are spending money, saving money, there's not that investment is easy because there's a hard return on that's measurable. Consumers' financial lives, I don't see that. Where I see the big opportunity for AI in particular, and it's probably more generative or more agentic AI stuff, are the agents that are going to do things for me. Colin, there is nothing I dread more in life than when my wife says to me, you have to call, and it doesn't matter what she says after that. I don't want to talk to anybody. I want a tool that does it for me. I want, go get the refund, go dispute the bill, go do this, you call the
I think that's
agents to do this.
happening. That's going to start
where
happening.
I think this big opportunity is.
When I wrote my first pitch deck, when I started Varo, I had a bot that was basically doing this. It was looking at rescheduling bills. It was moving money for the consumer. Now it's taken a while for the technology to catch up, but I think we're very close to that, where these agentic services are going to be able to perform transactions once they're permissioned by the user that can allow them to do a whole host of things. So I think we're very close to that becoming the next reality. And so watch the space, but I think we're not too far away. A couple other quick things that I'll say on this front, though, is I think embedded finance is something we want to keep a close eye on. So as particularly payments, credit, you look at some of the deals like Affirm has been doing in terms of embedding the buy now, pay later into transaction flows. You look at what's happening from a payments perspective now, and tokenization also is going to take it to the next level. So I think you're going to see a lot of innovation where you start to blur the lines between sort of traditional banking experiences and just kind of how you manage your day-to-day and how it blends into this overall commerce experience. The last point I'll make is also on identity. We talked a lot about fraud, but I think digital identity is a real precursor to access and being able to create greater financial inclusion, particularly for communities and populations of people that have been locked out or left out, or there's low levels of trust. Being able to create identity tokens that give them access to quality financial services, I think, is going to be another really important area of innovation.
Awesome. Last question. Did you watch the Oscars a few weeks ago?
I did not, but I did watch every movie that was in the Oscars.
So you missed the guy who got the award for Best Actor.
Adrian Brody. I heard he went on
and
and
so when the
on.
lights and the music went in, he stayed and he didn't leave the stage.
Is that
you
gonna
want
be
to pull the same thing here? We're out of time. But,
10 more minutes.
Should we just stay anyway? No. Thank you, everybody, for joining us. Please give Colin a great round.
Thank you, Ron.
Thanks.